In 2022, we spent more money in interest payments than we did on Veterans Affairs and transportation in the country combined. Now, again, right now, this $475 billion interest payment isn't really that big of a deal because we're able to manage that. But remember what I said just a minute ago. Too much debt isn't a problem until it becomes a problem. What it looks like right now is that by 2025 and 2026, our interest payments are going to exceed our entire military budget. But even that is still not the major problem. Now, the reason why we're seeing our interest payments rise so quickly is for a couple of reasons. For one, we keep spending more money that we bring in, so our national debt rises, so our debt level, our debt balance is increasing, and at the same time, our interest rates on these debts are rising. The Federal Reserve Bank is working to raise interest rates as a way to bring down inflation, and our government national debt, our almost $32 trillion worth of national debt, is not a 30-year fixed rate mortgage. Some of this debt readjusts every month, some of this every 6 months, some of this every year, some of this every 5 years, some of this every 10 years. So every 6 months or so, we're seeing another chunk of our national debt readjust at the higher interest rates, which also means that the interest payments are rising. So our interest payments are rising because one, the interest rate on our debt is rising, and two, because our balance of the debt is rising as well. Now again, that by itself isn't a big deal because too much debt isn't a problem until it becomes a problem, and as long as revenues are rising for the government, meaning tax revenue is rising, then it's okay because they can keep making the payments. The problem is we're facing an economic slowdown, a potential recession if we're not already in a recession, which means that profits fall, incomes fall, and if we see profits and incomes fall, that means tax revenues fall at a time when expenses are rising. But there's one more major factor which makes this even more interesting. We have some countries around the world, notably the BRICS nations, which are Brazil, Russia, India, China, and South Africa, that have been noticing that our government debt levels are rising, that our interest payments are rising, that we've been printing a lot of money, and now they're working to diversify themselves away from the United States, and these BRICS nations have been working to develop their own reserve currency. Right now, the world reserve currency is the dollar, but you're starting to see more and more countries around the world that are trying to treat this like an economic weakness for the United States, and they're trying to create their own reserve currency, and this new reserve currency looks like it might be backed by physical gold. Now, our money, or what we call money here in the United States, isn't backed by physical gold. It's not backed by any metal. It used to be back before 1971, but today it's just backed by a promise from the United States government that our money has value. Because before 1971, our dollars were backed by physical gold. If the Federal Reserve Bank wanted to print more money, well, we needed more gold. We need more wealth. It was a way to protect against inflation because then you couldn't just print money on command. Well, the problem that happened was leading up to 1971, we had a lot of debts here in the United States, and a lot of countries around the world were demanding payments. They were demanding gold because they lent money to the United States, and that was when President Richard Nixon in 1971 took the dollar off of the gold standard, which now meant that the government and the Federal Reserve Bank had the ability to print and spend money on command because now you no longer needed that physical gold. So now the government could spend whatever amounts of money that they wanted, the Federal Reserve Bank could print whatever money they wanted, the government could then pay back all their debts, and there was no big deal. The problem was that it created a lot of inflation, but the government was able to spend whatever amounts of money that they wanted. Now you have these nations around the world saying, it looks like the United States government could be facing potential issues in the future with all the money printing and their debt costs. And now they're looking to create their own reserve currency backed by physical gold. In 2022, we saw central banks around the world hoard and purchase more gold than really ever before. This is the most gold purchases by the central banks since, well, the early 1970s. This brings us to the ultimate question of how is this going to affect the value of the dollar, and what does this mean for you, and what can you do? Well, when you have high inflation, it reduces the value of the dollar, which ultimately causes the price of things to go up. Now, yes, we are seeing the Federal Reserve Bank work to increase interest rates as a way to bring inflation down. Inflation has come down off its highs, but inflation is still very high. This is coming at a time where we're also seeing a lot of worries and concerns about where our economy is headed. And so if our economy continues to go down, well, that could force the Federal Reserve Bank to potentially pivot and start inflating at a time where our economy is slowing, but inflation is still high. So there's a lot of uncertainties as to what could happen to the value of the dollar. But what this means for you is really now, again, the importance of financial education and why you want to be investing your money and why you want to be preparing to invest your money instead of just hoarding cash. because at the end of the day, cash has lost value for the last century versus investments, whether it's stocks, whether it's real estate, whether even if it's some physical gold. These investments have gone up in value, or at least price. Like gold doesn't create more value. You just see that as the currency value or dollar value goes down, the price of gold goes up. Now, I personally own gold, but I don't own a huge chunk of gold. About 2% of my total investment portfolio is gold. I don't consider it an investment. For me, gold is my insurance. It's a hedge. It's an alternative way for me to save money, because now I can save hard money, something that I can see, feel, and touch. Do I really care what's happening with the price of gold? No, I don't care if it goes up or down. I'm just accumulating a little bit of gold. There's a small piece of my portfolio as insurance against worst case scenario protection. That's why I own physical gold. But again, this is why financial education is so important. That way now you can take your cash and put it into an asset, something that's working to bring you value. Of course, this is now where how do you invest, when do you invest, and what do you invest in is so important. And I have a ton of videos on my channel that go over this type of financial education, because now it pays to be aware of what's happening. We keep you updated on market briefs, but then it also pays to use your money smartly. That means live below your means, have a savings cushion to protect you against a financial emergency, and then have cash put aside to be able to capitalize on distressed assets that might come your way. That way you can use the system to your advantage instead of just being the person that gets screwed over by the system. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.